Good afternoon, everybody. This is Dennis Wilmore with the Active Trend Traders. Welcome to Making Money Trading Stocks and ETFs for, Friday, March 23rd. Where's this month going? This has been one heck of a crazy week with the markets. When the market has a week like this, sometimes it's just, we kind of go, hey, we survived, we protected our either profits or made sure that our downside was protected, and we're loaded up in cash and ready to start trading once the market decides it's going to roll back up and start heading the other way. Let's take a look at what we've got going on here. All materials presented are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. One thing that I'm doing right now is I'm plugging back into the Market Technicians Association. We've got a new training session out that I'm checking out. Totally different than when I went through the training for the CMT. They basically have combined it all into just one thing for them, not books per se, but their own workbooks. And so kind of interested to check that out. Still no plan to get the market tech, the certified market technician designator. But I do like to keep studying and keep sharpening the saw. Okay, remember the best trade in the year comes around about every 2 to 3 weeks, so be patient. Now, with the market going into a little bit, what appears to be a little bit more significant correction. Hey, excellent, Phil. Phil says he has a CMT, level 1. Awesome. So 5 pillars of active trend trading. Here's what we're looking at. Basically, we trade what to trade. In this case, we were trading BABA. When to enter, when to exit. We basically pulled a entry off of our regular active trend trading rule number 1, I believe. Jumped in, when to exit. We had our profit targets, and we exited at 2 different places with this BABA trade. What strategy we're going to use? In this case, we bought the stock. And what to expect? We expect a probability of success of about 65%, with a win-loss ratio also of about, we're looking for a 3 to 1, 2 to 1, 2 to 1 to 3 to 1 win-loss ratio with our entities. So the objective of the this session is to, 1, timely actionable intel review at the end of every week. I've got a couple of stocks I want us to take a peek at. And again, this is one of our free webinars that we offer from the Active Trend Trading System for people who are just want to check out active trend trading or just wanting to find out a little bit more. Occasionally, we will have bonus trades that we provide for anybody who is out there dialed in. So if you do miss the live session, remember you can jump in on the recorded session, and it's posted to the website under Making Money Trading Stocks and ETFs, and also on the YouTube channel. So if you do like to go to the YouTube channel, please give us a thumbs up saying, hey, we like your stuff. Anyway, so we'll do a real quick market overview. And right now the market, I would call it a little bit more than somewhat mixed. What I was, as I was thinking, is kind of labeling to this week is what's different this time. And so we'll try to take a look at that. What is different this time? Here's where we're sitting. Took a little bit of a hit as the rest of the indexes did also. As you can see, Dow Jones, S&P, and Russell now have slipped below into negative territory for the year. Both the NASDAQ and the NASDAQ Composite has also dropped, but as you can see, not slipping into negative territory yet, but there's plenty of time left in the year. We'll see if we are going to slip into those. I'm keeping my eye on the seasonality of gold, but I'm also keeping my eye on the seasonality of a lot of things. That's one thing that we offer with the active trend trading is we basically focus on some very a good stable, excellent stable of index and commodity and ETFs like the financials and the biotechs from the industry groups. And we look towards the seasonality, and gold's one of those where we're always looking for the seasonality. What are we expecting with gold? Well, one tends to be from the March through about the June-July timeframe where you get kind of just a sideways movement. Now there may be times where it jumps up, like gold's jumping up right now because of the everything else that's going on with the with interest rates, with just all kinds of uncertainty in the market, and gold is always a safe haven for that. But gold tends to get a bid somewhere in the late June to into the late July timeframe, and then it goes on a tear, pushing up from that point. One of our studies that we've been looking at and continue to look at, and I will be updating this, and I'll pop this up really quick. Here's what we've got on biotechs, but let me go up here to gold. There we go. Here was the gold study here, and this is the actual gold for nugget last year. And what we could see was that when we hit these bid points in gold, where gold tended to spike up a little bit, either on the 15 or the 40-year period pattern with seasonality, well, so did nugget. Now, did nugget's chart look exactly like this of the gold COMEX? Of course not. But of course, nugget is a gold miner. But the thing that I want to highlight to people is that this seasonality thing can work exceptionally well just for getting that real quick move. And these moves lasted several weeks to a couple of months. And they were for those of you who've seen my nugget comparison, they were for some really nice gains. So be aware, be ready. One of the other things that I'm looking at is, of course, crude oil. Crude, we're tying it down in this area here. Crude's acting more like its seasonality chart this year than it did last year. And then, of course, biotech. Again, it tends to push sideways into the May-June timeframe and then catches a bid. As you can see, it came pretty close to it last year. We'll see how it does this year. Again, the seasonality aspect of it, while the actual chart for the year may not look exactly like the seasonality, what it does is if you know when the buyers tend to come in, or where they've shown the propensity to come in on a seasonal chart, we can then look for opportunities on the daily chart of, like, this is LABU, and oftentimes they do line up within typically a 3 to 6 week period. And so I believe, I definitely believe it's well worth the wait. And one of the things that I'll be providing for people who join us for the free webinars is I'll be providing triggers for gold if they set up properly for a bonus trade. So moving right along. Okay, Russell again. This may be turning on its head. One of the things, if we go into a more significant correction, is that oftentimes keep in mind that during a correction, or we're not close to a bear market yet, and if we did go into a full-blown bear market, that during those really hard correction, those are sometimes when you have some of the biggest tick-ups from a bullish standpoint and larger runs than even in a regular year. So here's where we sit with active trend trading. Strategy 2 is looking okay. We basically got into a really good trade for strategy 1 at the beginning of the week with UCO, which is the 3-time leverage ETF for oil. But then at the same time got whacked on the other side of that with a trade that we put in on the biotechs. So here's where we're sitting. Here was that trade, UCO, closed half the position for about almost a 12% gain. LABU did a great job of target shooting to get us into the trade. It took out the stop loss at 87 today, and so we lost about 6.9% or $553. Waiting for strategy 2, waiting for strategy 3 setups as we sit there. Okay, let's take a real quick look at a couple of charts, or let's go and look at the indexes. Okay, here's what we've got. Daily chart on the left, weekly chart on the right. As you can see, let's focus first on the weekly chart. This is more or less a classic type move that we've talked about previously. A classic type move where prices fell hard. They recovered the first rally attempt, which this has taken over 1, 2, 3, 4, 5 weeks for the rally attempt, and now we're selling off from the rally attempt. Now, in order for this to go into what we would call a full-fledged downtrend, it would need to take out those lows right here. And at this point, it has not done that, but that was the lows of the year. So we'll see if that takes that out. If it takes it out, then we can say, okay, hey, we are in fact in a downtrend on a longer time frame, which is this is the weekly over here, because we're already showing new low, fail on the rally attempt, drop, pop, fail on the rally attempt, and all of this level of supply up here, where this overhead supply acted just like it was supposed to do. Now it's resolving itself to the downside, taking out this low, so we have a new lower low, when does S&P start to become interesting? S&P starts to become interesting when it starts getting back down about the 2600 level. Right there, somewhere between, I would say 2620, 2600. We'll see if we bounce there. And then, of course, you have the 200-day moving average. 200-day moving average gets busted. Right now, we've got everything below the moving averages with the exception of the 200. So we've got the 20 period, which appears to be crossing the 50 period, 50-day today. So this is telling us that, hey, we should be trying to focus on downside trades with S&P. How about NASDAQ? NASDAQ quickly. NASDAQ, similar type situation. We have a bearish cross on the 820. It has broken below the 50-day moving average, so prices are below the 50, but they're still above the 100, still above the 200. And it's looking like TSI weekly chart still pointing down. Remember last week when I was talking a little bit about the TSI being in this kind of like this sideways movement here, which is, even though we were pushing up to make new highs for the week, the momentum as identified by TSI was not supporting the price move. And so sure enough, we get a resolution to the downside. Market forecast looking down, also starting to tick down from a negative divergence. Russell real quick. Whoops, Russell. There we go. Russell had been looking pretty strong, like it was going to take off here. We can actually move this, activate that. Let's move that up to about there. Okay, we have pushed down into the last, the the area where the what do you call these? The origin of the buying or the origin of demand came in on this big candle right here, and sure enough, that's where it's stopping right now, just at the 100-day moving average. Let me switch over to the other. There we go. Switch over to the other chart. If we basically close below where we're at, then we're probably going to this level here. On a longer term entity, what type of retracement are we looking at right now? Well, let's just go from here to here. And as you can see, we have dropped the 38.2. We're pushing in on the 50. 50 gets bust. If 50 breaks, then we're probably going to go to the 618, and then we'll see what happens from there. 618 to drive it on down. If it gets lodged in this area, there's a lot of support level right there between the 1500 and the 1475. So let's just keep an eye on that right now. What is right now, what is the Russell telling us? Russell is telling us that basically, yeah, prices are hanging just slightly above the 100, but we have not quite got a 820 cross yet. But we have broken down below the 50-day moving average. Next week, because we're not getting, the buyers are not showing up today yet. Now they still have a little bit of time where they can, maybe push the envelope. But wholesale, like these big long candles, see these long wicks down here, buyers are not showing up like that yet. But we're in the range where you would expect them to start showing up, somewhere between here and down in this area here. Interesting. So, okay, that's where we're sitting at with that. Let's take a real quick look at a couple of stocks, and then we'll call it a day. One of the I'm going to go over to UCO. UCO is holding up very nicely, folks. The premium members were offered this one, and we bought this down here at about the 24.90 area, or 24.71 area, I think is what it was. We got a really nice bounce up. Sold part of the position at the 27.70-ish level for almost a 12% gain, and I'm liking UCO for a longer term gain. So what I want to do to trade this properly is wait till it pulls back into the moving averages and then load up again with those shares that I sold. So I'm liking that one. What other stocks are holding up well? Well, in this sell-off arena, well, one, Netflix. Netflix is hanging really, really well considering the rest of the market, and the NASDAQ has been selling off fairly significantly. So NASDAQ is on my list to say, okay, where would Netflix be an interesting buy? And we're almost there. Somewhere between this 286 level and the 300 level would be where Netflix, to me, would be an interesting buy. NVDA. Not, it's still hanging above its 50, but is it out of sync with the market enough? At this time, I don't know. It has broken this little trend line that's shown right here. That has broken now, and so we'd anticipate NVIDIA to move back down to the downside. The 820 has not crossed yet. The 820 has not crossed on NVDA way back since right here, November 2017. But it looks like it wants to weaken up. Take a real quick look at our buddy Tesla. Tesla appeared to have hit support there at 300. We'll see if this long wick, I'm not going to jump into Tesla at this particular point until it proves itself a little bit. But that's looking interesting. And last but not least, I'll just cover real quick BABA, not BAB, BABA. There we go. Baba's basically, I mean, if Baba, basically puts in pulls down to these lows here to 175 to 170-ish, that will put us kind of like in a sideways move. We could have kind of a head and shoulders thing working out up here. Shoulder, head, shoulder. You guys see that one? If that result, here's a shoulder, left shoulder, head, right shoulder. Kind of a neckline running around here. If that bursts and heads down, where might it go? Well, support at there's a demand area at 160, between 160 and 150. Another one down here between 140, looks like about 143 and maybe 135. Another one down here, about the 122 area. So this could literally, if this gets into a, hey, I'm falling out of the sky type scenario, those areas where we expect it to slow its roll a little bit going forward. So let's see, NVDA, YY, Netflix. Okay, that basically covers what we had to cover today, my friends. For right now, I'm just going to be patient. I'm waiting till, since some of the markets are making not new lows, but they're similar to BABA, where it's made a low on this move down. It has not shown any indication that it is ready to turn, such as a small body or a real long wick on the bottom that's saying, hey, buyers are coming in. Right now, look to trade things like BABA, Tesla, at the moving average lines. Like here's a daily chart today. That would have been a great position. And we've been doing that a lot more with the trades that we've done this week, where we're targeting these, what we call target shooting, these areas. And matter of fact, we are going to work on that aspect with this week's presentation for our Wednesday night training session. We're going to talk specifically about target shooting and how to do it, and how to do it well with your conditional orders. So if you're a premium member, it's going to be a great session. So with that, I bid you adieu. Have a great weekend, everybody. And if you're online for the final hour, we'll be up in about a little bit over a half hour. Got to go check some things. And so God bless everybody. Aloha.